Surprise bill? Need fast funds? CashNet USA can help. When you need money fast, be the hero.
Apply in minutes at cashnetusa.com and get a fast decision. All loans subject to lender approval. Speed of funding is subject to verifications and your bank's processing times.
Hey, Fidelity. What's it cost to invest with the Fidelity app?
Start with as little as $1 with no account fees or trade commissions on U.S. stocks and ETFs.
That's music to my ears.
I can only talk.
Investing involves risk, including risk of loss. Zero account fees apply to retail brokerage accounts only. Sell order assessment fee not included. A limited number of ETFs are subject to a transaction-based service fee of $100. See full list at fidelity.com/commissions. Fidelity Brokerage Services, LLC, member NYSE, SIPC.
Due to many issues related to the COVID-19 pandemic, the inflation rate in the United States rose rapidly, starting in 2021. In response, the Federal Reserve, or Fed for short, raised interest rates 11 times from March 2022 to July 2023 to slow down the economy. Recently, in July 2024, the inflation rate dropped to 2.9%, the lowest rate in 3 years. The last time we saw inflation below 3% was March 2021. But economists say that we likely won't see inflation come down to the Fed's target rate of 2% until specific categories like housing gets less expensive. Now that the inflation rate is cooling, the Fed is expected to cut rates soon. That will have many downstream consequences for our financial lives. This podcast will review 6 money moves you should make with potential interest rate cuts looming. Hey friends, welcome back. I'm Laura Adams, an award-winning author, money speaker, founder of the Money Stack newsletter, and host of Money Girl with over 43 million downloads. I also work as an on-camera financial spokesperson and partner with select brands for PR and content marketing. As always, you can learn more and email me at lauradadams.com. That's also where you can subscribe to the free Money Stack newsletter. And if you have a comment or question, I would love to hear it. You can leave it on our voicemail line at 302-364-0308 or shoot me an email using my contact page at lauradadams.com. All right, so let's talk about how the Fed uses interest rates. The Fed is the central bank of the United States, and it has 2 primary missions. One is keeping prices stable for consumers, and the other is ensuring a low unemployment rate. So the Fed's lever for achieving those goals is raising or lowering the federal funds rate, which is the interest rate at which banks borrow and lend to each other. And that rate trickles down to what consumers have to pay for debt, like what they pay on credit cards and loans, or what they receive on interest-bearing accounts, like savings accounts. Now, the good news is that when interest rates go down, rates for fixed-rate loans like mortgages, auto loans, and personal loans, they also go down. Debt also gets less expensive for variable rate products like credit cards, lines of credit, and adjustable rate mortgages. But the bad news is that you earn less on savings when rates drop. Now, in the past couple of years, we've seen some pretty nice rates, north of 5% on high interest savings, CDs, and money market deposit accounts. Since banks follow the Fed's moves, these cushy rates will likely decrease as the federal funds rate decreases. However, it's likely to happen slowly, so there definitely is still time to take advantage of high yields. But with at least one interest rate cut likely in 2024, maybe even 2, who knows, here are 6 wise money moves you should make. Okay, move number 1 is to watch your savings rate. If you've been enjoying those higher returns on variable rate high yield savings, they can fall even before the Fed cuts their rate, simply based on expectations about what may be coming. While you may notice little change with regular savings that are already paying very little, like 0.5% or 0.25%, don't be surprised if your high interest account starts paying less. Remember that banks and credit unions can change what they pay on savings anytime, and they may not even notify you that you're earning less. Plus, not all financial institutions react the same way to a cut in the federal funds rate. Therefore, you should keep a watchful eye on what your savings earn. If you see a significant drop, shop around, find higher yielding options. You can quickly and easily move your savings to a better account so it earns the most possible interest for you. I recommend you maintain enough emergency savings to keep you safe in a crisis. Maybe you lose your job or business income, or you have some unexpected significant expenses. A good rule is to keep at least 3 to 6 months worth of living expenses in an FDIC-insured liquid savings account. That preserves your money, and it allows you to tap those funds when you need them quickly. But be sure not to hold too much cash in savings, especially as interest rates decline. Investing your excess cash for higher returns is critical so you can reach aggressive financial goals like retirement or paying for college. All right, the second money move you should make is to purchase a certificate of deposit or CD. So as savings rates fall due to interest rate cuts, CDs will also start paying less. However, the upside is that you can lock in today's relatively high interest rates for a set CD term. It could be 6 months or a year, or even up to 10 years. Remember that you typically must pay a penalty if you withdraw money from a CD before the end of its term, known as the maturity date. CDs are an excellent place for any excess cash that you plan to spend within the next year or two. Maybe you're thinking about buying a home, and this is, for your down payment, or buying a vehicle. For instance, if you buy a 2-year CD at 5.5%, you're going to be really happy to earn that much if rates dip significantly over that 2-year period. So shop and compare the best CD rates so you can lock in the highest return on your cash that, you're not going to need in the short term. Savings is the right place for those emergency funds because they offer the most flexibility. But you want to consider purchasing one or more CDs if you want to earn a fixed, higher interest rate on your cash. They're also an excellent option if you're getting close to retirement or you're retired and you want to earn as much as possible while keeping your money safe. The bottom line is that it's an excellent time to lock in some of the highest CD rates we've seen in decades. The chance to earn 5% or more on cash will not last once the Fed starts cutting rates.
I'm Cindy Lauper with fellow Cosentyx advocate, Chef Michelle Bernstein.
We'll share our experiences with plaque psoriasis, with psoriatic arthritis, and Dr. Panico will talk about the possible connection.
Cosentyx secukinumab is prescribed for adults with moderate to severe plaque psoriasis 300 mg dose and adults with active psoriatic arthritis 150 mg dose. Don't use if you're allergic to Cosentyx. Before starting, get checked for TB. Serious allergic reactions, severe skin reactions that look like eczema, and an increased risk of infections, some fatal, have occurred. It may lower your ability to fight infections, so tell your doctor if you have an infection or symptoms like fevers, sweats, chills, muscle aches, or cough, had a vaccine or plan to, or if IBD symptoms develop or worsen. Learn more at 1-844-COSENTYX or Cosentyx.com/Cindy.
Surprise bill? Need fast funds? CashNet USA can help. When you need money fast, be the hero.
Apply in minutes at CashNetUSA.com and get a fast decision. All loans subject to lender approval. Speed of funding is subject to verifications and your bank's processing times.
If you're like most people, it's really easy to put off some of life's most important decisions because you just don't have the time or maybe the patience to deal with it, like finding the perfect life insurance policy. 40% of people with life insurance wish they'd gotten their policy at a younger age. Fortunately, Policy Genius is here to help you get the coverage you need fast so you can move on with your life. What's amazing is that you can find life insurance policies that start at just $292 a year for $1 million of coverage. And some options even offer same-day approval and avoid unnecessary medical exams. Policy Genius lets you compare quotes from America's top insurers in just a few clicks to find your lowest price. They have an expert licensed support team that becomes your advocate. So they're helping you. They're answering questions, handling paperwork, and helping you make decisions with confidence. And even if you have life insurance at work, it may not be enough to offer protection for your family's needs. And it doesn't come with you if you leave your job. So don't put off life insurance. Make it easy with Policy Genius. Head to PolicyGenius.com or click the link in the description to get your free life insurance quotes and see how much you can save. That's PolicyGenius.com. Move number 3 is to delay large purchases. If you're considering a big purchase, maybe you want to buy a home or a car, waiting could be wise. That's because lower interest rates reduce the cost of financing them, and more cuts could be on the way. However, lower mortgage and auto rates typically boost demand for homes and cars, which could increase their prices. While you can't perfectly time a significant purchase, when it's possible, try to wait until you see rates coming down. That will make your monthly payments more affordable or even allow you to pay a higher purchase price. Money move number 4, consider using home equity. If you're a homeowner and you've got higher home equity right now due to those higher housing prices, tapping it could be an excellent source of funds if needed. You may qualify for a home equity loan or a home equity line of credit, which is called a HELOC, for things like home renovations, debt consolidation, or any other purpose. With interest rate cuts on the horizon, a variable rate HELOC is a better option than a fixed rate home equity loan. And you can use some or all of your HELOC credit line, and it will get less expensive if interest rates continue falling. Remember that when interest rates fall, you're better off using variable rate loans and lines of credit instead of fixed rate loans. Move number 5, look into refinancing. If you bought your home when mortgage rates peaked in 2023, refinancing may be wise as rates decline. If you plan to stay in your home for at least a few years and rates are at least 1/2 to 3/4 of a percentage point lower than your current mortgage rate, refinancing could be beneficial. You want to consider how much money you'd save on a new payment compared to your current payment, plus the cost of doing a refinance. Refinancing fees could range from 2%, maybe even up to 6% of your new loan amount, depending on your lender and your home state. So you want to get multiple quotes to compare the best refinancing offers. Refinancing definitely makes sense if your savings exceeds the cost of doing a refinance over a reasonable period of time. Plus, if your credit is better now than when you got your mortgage, that could also help you get an even lower interest rate. But for those of you who are lucky enough to have a very low mortgage interest rate, refinancing is not something to consider. And our last tip, number 6, maintain good credit. No matter what happens with interest rates, your credit is a significant factor in how expensive it is to borrow money. So improving and maintaining good credit always pays off. Plus, excellent credit scores help you save money in a lot of other ways, like paying less for auto insurance, paying less for home and renter's insurance, and paying less for utility deposits. It can also help you get approved to rent an apartment. You'll receive premium money-saving offers and even land a job with an employer that checks credit. So I hope this has given you some direction, some things to think about, as we're likely to see some interest rate decreases coming soon, at least through the end of 2024 and likely more in 2025. Before we go, here's a quick reminder to subscribe to The Money Stack, my weekly newsletter, when you visit lauradadams.com. It's filled with money tips, tools, news, challenges, and things I enjoy. You can subscribe for free or become a paid member with access to live educational events. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast, and I want to thank our amazing team. Steve Rickyberg audio engineers the show. Brandon Gaetjes is our director of podcasts. Holly Hutchins is our digital operations specialist. Morgan Christensen is our advertising operations specialist. And Davina Tomlin is our marketing and publicity associate.
Surprise bill? Need fast funds? CashNet USA can help. When you need money fast, be the hero.
Apply in minutes at cashnetusa.com and get a fast decision. All loans subject to lender approval. Speed of funding is subject to verifications and your bank's processing times.
Imagine earning a degree that prepares you with real skills for the real world. Capella University's programs teach skills relevant to your career so you can apply what you learn right away. Learn how Capella can make a difference in your life at capella.edu.